Hey, what's up? I'm back after a short Christmas break, and today I want to touch on the topic why Chinese stocks are under heavy pressure after Alibaba experienced a sell-off based on some news around Chinese regulators looking at monopolies and trying to break them up. So I'm gonna touch a couple of stocks. Of course, Alibaba, I have my personal comments on that, also based on my experience with doing e-commerce business in China, and then touch a little bit more on some stocks that I'm also having in my portfolio. For instance, obviously NIO, which is facing pressure today, as well as Meituan, and talk about in general, is this a buying opportunity or are we worried about the situation right now? So what happened is that on Christmas Day here in Germany, 24th of December, we saw the news that Alibaba is getting investigated by regulators in order to break up the monopoly. And well, this is following the story that Ant Financials tried to make an IPO, but after Jack Ma, the founder of Alibaba, meeting with regulators on November the 2nd, already on November the 3rd, the Shanghai Stock Exchange suspended the Ant Group's hotly anticipated largest IPO ever. And then following that, we saw new draft antitrust rules that have been released by the state administration, and in general more calls for regulations in the space of technology as well as startups and in the whole e-commerce business in China. So if we're taking a look here at the Alibaba shares, since this all began, the sell-off was indeed huge. So we're now trading almost 30% down after the suspended IPO, and notably down another 12% after the new investigations that have been announced. And personally, I have no position in Alibaba currently. I've sold my stake in Alibaba quite some time ago, so also I didn't have the nice run up recently, but this is due to other reasons personally, because I've been doing business in China in the e-commerce sector, and I have my personal experience with dealing with Alibaba, and this in the end led to the fact that I am not so convinced on how the company is operating anymore. I'm rather on the side of Tencent, so I'm still having a big investment in Tencent. I made a 10x on my Tencent investment so far. And generally, the Chinese internet, the Chinternet, is divided both between Alibaba and Tencent, which are really those two big innovation drivers. And both of those companies have several investments, not only in the e-commerce space, but even, for instance, in the EV space. So, for instance, Tencent is backing NIO and Alibaba is backing Xiaopeng. So you can see that there is a divide in this whole tech sphere in China. And now regulators are targeting possibly Jack Ma personally here, but also on top of that, Alibaba for their so-called wrongdoings. And a little bit of context here, as I've been doing e-commerce business in China, I see a big disconnect here between the perception that China is an unregulated field. In fact, I think there are one of the most precise and deepest rules in China in place when it comes to consumer protection, in general, the legal context for establishing an online business and so on. So the regulation is already in place, and the question in China is always like, how much is it getting enforced? Because this is ultimately also a tool in the hands of the regulators and ultimately also politics. So the first question would be, is Alibaba a good investment now? And I would say, well, after a juicy minus 30%, I think there should be some kind of bottoming area happening. So this may not be the worst timing if you're actually thinking about opening a position, but still I cannot give you any advice here whether or not Alibaba would be a good investment in the end. As I mentioned, I can only speak about my personal positions, and I have no position in Alibaba, not looking to invest in it either. So you need to do your own due diligence and see whether or not you like the company. But what I can say is that it looks like there's definitely a lot of bad news priced in already. And it's interesting to see that mostly Alibaba was kind of punished also by the markets, because I was actually expecting that other companies are getting punished more. For instance, the e-commerce company Pinduoduo. So Pinduoduo, in which I also have no position, is trading almost at the recent all-time highs. So holding up quite well also during the time of those investigations. And the reason why I'm wondering Why Pinduoduo is not, seeing a pushback here is because I think that most of those rules are actually targeted specifically at the business model of Pinduoduo, because parts of the rules that those regulators are targeting is dynamic pricing and also group purchasing, and in general some pricing that is unfair either to consumers but also to the merchants on those platforms. So obviously Alibaba has a big hand in that, because they're obviously using their algorithms in order to have low prices for the consumers and to have real bargains on their platforms. But at the same time, this is giving better prices to some of the consumers, worse prices to others, and it's giving pressure onto the merchants that are selling on this platform. But this is not only unique to Alibaba. In China, it's super common to have rebates and discounts in order to make a sale. I think we see this, for instance, also with Luckin Coffees. In China, this is much more common and even expected from the consumers. And coming back to Pinduoduo here, this is actually the company that really made this whole group buying activity where people come together in order to get a better deal together, as the core of their business model. And actually, this should be at the target of the investigations of the regulators here. So it's interesting to see that most of the news in the international media that we see is mostly targeted towards Alibaba here, and Alibaba is having the largest cut, maybe because of the personal connections here with Jack Ma and his troubles with the government. But ultimately, if we judge and want to see which company is actually going to feel those implications of, for instance, new rules and possibly also enforce new rules, I think it's rather Pinduoduo. And this also brings me to another company which I am personally invested in, and I have been talking about it here on the channel, which is Meituan. And they are this food delivery company in China, but with many more services and businesses. So you can, for instance, purchase any kind of services and products on the platform too. And they also are playing around with those group buying activities. For instance, if you're using their WeChat mini program, but it is actually much less prominent for them. So for instance, you can buy a meal together with 2 persons or up to 3 persons even, and then get a cheaper rate on that meal. And I don't think that this will really be impacted too much by some of those regulations to come. And also, I don't think that Meituan, as a smaller business, not with the impact of many different subsidiaries and startup investments and so on, with the likes of Alibaba and Tencent, I think actually Meituan should be flying under the radar here of the regulators. So it's interesting to see that Meituan is still in this very steep downtrend here, and after the news with Alibaba, they also lost once again 7% in the market capitalization here, and it might only be bouncing off the $255 mark here, hopefully, and finding some support and hopefully break out this wedge pattern ultimately and going higher from here. But in my point of view, this is kind of a misconception, mispricing in the markets here towards those negative news around monopolies in China. Then obviously also Tencent, the other large internet giant, has been dropping market share significantly. But in my point of view, Tencent may be in less of trouble than Alibaba actually, mostly due to the fact that, they don't have this personal relationship that, for instance, Jack Ma is facing now regarding the regulators here. But ultimately, because there are, a larger corporate there in China with this big diversification and all of those different areas in which they are active, in which they are, for instance, incentivizing some of the users of one startup to join a service of another company that they're investing in or which they have building. So this is actually what the regulators, I think, want to prevent to happen in the future. So it does make sense that actually Tencent is seeing a pullback here. But in my point of view, for Tencent, this pullback may be actually a buying opportunity here. But I'm also kind of biased here because I'm still holding on to my investment on Tencent here. On the other hand, this 16% down from the all-time highs is quite juicy in my point of view, and I don't think that Tencent will, kind of be broken up entirely. I think as soon as we get some more positive news on how the regulations are actually going to look like, then I'm pretty sure that Tencent will actually also bounce back. And finally, as always, if we have bad news about China in general, for instance, the trade war and so on, Chinese stocks pull back across the board. And so we see the same thing happening today also with the Chinese EV players. Notably, my investment here in NIO is also down. But for me, this is mostly a technical breakdown here. I think NIO will be recovering from this current sell-off. And I think this is mostly unrelated news to the company fundamentals. Obviously, NIO will not have any big implications on their current business, especially for the size of NIO currently. Once they're getting bigger, that might obviously be a problem if their e-commerce business is getting bigger and bigger, and they may have, for instance, also some of those pricing algorithms based in their apps and so on. Then that might be something that they should be aware of regarding those new legislations. But for now, I think this is just some general, more cautious approach by investors into Chinese stocks, and they want to see how this plays out with those new regulations. But in my point of view, as a retail investor, nothing to worry about when it comes to those Chinese EV players. So in general, to sum it up, I think the impact of those news are possibly a little bit overstated, as we always see with Chinese stocks, that if there's fear in the market, we see a heavier pullback. Is this a buying opportunity? Not in all of the cases. I would be a little bit cautious about Pinduoduo, for instance, because I think the pullback hasn't been reflected in their stock price. For Alibaba, yes, I think it's having a juicy setback so far, but you need to be really aware in what you are investing in. I'm not entirely positive on the outlooks on Alibaba. Instead, for Tencent, I think yes, there might be a bounce, and I'm kind of more relaxed about what Tencent is doing in the markets there. And in the end, for the other Chinese stocks, this is kind of a mispriced information. So if they are red today, I think that's a little bit of a buying opportunity here in general, and we will see a healthy rebounds here as soon as we have more clarity for the markets in general. So I hope you enjoyed this quick update. Let me know what you think about it in the comments, and see you in the next one.